Hi everyone, welcome back to the Playbridge podcast. This is your host Ruffin. Today I'm chatting with Zehra Naqvi. She's currently the head of founder community at Republic and creator of the Z List, a community of 12,000 investors and founders in New York City. Zehra first started learning about venture capital and investing while studying at Columbia. After graduation, she accepted an offer to join the Republic venture team over an investment banking offer, and she's never looked back. During this episode, we chatted all about her work democratizing access to venture capital, investing, and education, and why it's important. She shares tips and thoughts from her own angel investment into Kofi Beauty, and so much more. This was a fun one. I hope you guys enjoy. Hi Zehra, welcome to the show. I'm so excited to have you on. How's it going today?
Good. I'm really excited to be here. I've listened to so many of the other episodes. I think the one that you did with Emily was one of my favorites, especially because she's just so good at explaining like how she got to being in VC and is obviously it's such a cool fun. So really excited to chat with you.
Yeah, Emily and I could have literally talked for hours, I think. So that was a super fun conversation. So you are currently the head of founder community at Republic. Will you start off by just sharing what Republic is, and then also what does your role of head of community entail?
Yeah, for sure. So Republic is a global private investment platform that democratizes access to private investing. I think just to make that even simpler, basically our platform allows anyone to invest in startups and private companies. Prior to 2016, that was not possible. It was very much gate kept, where you have to like meet a certain income requirement or a certain like amount of assets that you had. And that was the only way that you could legally invest in startups. The venture capital industry has only really been around since the 60s, but like the amount of wealth that has been generated by let's say less diverse folks and kind of just been concentrated is pretty crazy. And so I think our mission is all about democratizing that, educating people, of course, because that's a huge part of it as well, but really focusing on making it accessible and letting people know what the opportunity looks like and why investing is important. In terms of my role as head of founder community, we've actually never had a head of founder community before. And I think it's a really good example of when you're working at a startup, sometimes you're doing things like on the side in another role, and then you just realize how valuable it is. So I'm really defining this like as I go along throughout my career at Republic. But for me, in general, I think like founder community is really tough because we saw a lot of these companies like On Deck and Launch House that attempted to kind of create founder communities, and all of them kind of went through their own struggles. And I think a really huge part of it is a lot of the organizations that were doing that were not focused on, let's say, just like providing value from like an education perspective, where I think like community and getting people together in person is amazing, but understanding like what information is gate kept from like these founders, what did they want to understand? And sometimes it's the really boring stuff, like when do I get an advisor and like what do advisory shares look like? How do I protect my cap table? Like what does dilution look like after a Series A? Like those are like, I'd say less interesting questions, but founders are really asking them. So for me, it's a combination of, yes, the in-person community. We love hosting events. We love like just allowing founders to have fun, but then also realizing there's a lot of information that founders don't have access to. And we just want to be seen as like an opportunity and a place for them to ask those questions.
And so to be a part of the founder community, do you have to have like raised on Republic, or who gets access into this community? How can you get involved? Like what stage startups mostly are in this community?
Yeah. So this is open to anyone, basically any founder. You don't have to have raised on a Republic or like necessarily have done anything with us. It's really like an open call. So a lot of our events that happen in New York City, you should see in other New York City newsletters. I feature a lot of our Republic founder community events on the Z List, which is my newsletter. But really like this is for anyone and everyone. We try to partner with a bunch of different accelerators to get founders like aware of what we're doing. And it really is just like, I'd say the community itself is kind of boundless at this point because we are just like constantly getting new people involved and there's no real requirements at this point. We just like want to be accessible and allow people to let us know what they need and how we can help out.
So prior to being the head of founder community, you were on the investment team. And then before that, you led and I believe created the Venture Fellow and Associate program. Can you tell us a little bit more about both of those roles and what you built out in your positions there?
Yeah. So I'll start kind of like very much from the beginning. When I joined Republic, it was like prior to our Series A. So I guess we were like seed, like pre-Series A stage. Maybe there were like 40 employees. And so when I joined, the real focus at that point was kind of like, first of all, again, similar to our mission, like democratizing access to VC investing, but also democratizing access to like an ability to understand how you even invest and like the way that VCs think. And I remember at the time I was a senior at Columbia, and there was so much emphasis on getting into like the contrary programs and dorm room fund, which are all incredible programs, but their acceptance rates were like 1%. So there was like the other 99% of kids were not getting access to like incredible resources to learn how to invest, to learn how to be a VC. And of course, like, it's not like everyone can approve and accept every single person. But I think our goal was we weren't a VC and like we weren't like allowing people to invest necessarily, but we just wanted to run a similar educational program that allowed people to like more accessibly listen in on events, understand how to like due diligence, how to create an investment thesis. So that was a huge motivation for us. And the Venture Fellow and Associate program was really just like my frustrations over not really understanding the way that VC worked, looking at like the Y Combinator website from like 15 years ago, trying to understand stuff, specifically with the SAFE, and just realizing it wasn't the most accessible. So that program I ran throughout my senior year. And then when I was deciding between going into like investment banking or coming to Republic full time, I think a really huge motivation for me was wanting to be founder facing and still just being in the startup ecosystem. And the investment team at Republic is really interesting because we operate just like an investment team at a fund, in the sense that we do diligence and we present our deals to an investment committee. But when we like get our deals approved at the investment committee, those companies are going to raise on Republic instead of us writing a check. So I knew I would be meeting I was meeting like anywhere from 30 to 50 founders a week. It was incredible. I would be talking to like a CPG founder. 30 minutes later, I'd be talking to like a B2B SaaS Series A founder. And it sounds like kind of crazy, but I just knew I wanted to meet as many founders as possible, just get very well versed in the way that fundraising worked. Because even though Republic is technically alternative fundraising, every single one of those founders I was talking to had like a lead VC or a term sheet. And I just got to understand the way that those rounds really get broken down and the way that cap tables get formed. So those like transitioning from being more like VC facing or like dealing with our venture partnerships and then like doing the Venture Fellow and Associate program to being more founder facing, I kind of realized that I had built like a great network within just like I'd say like Gen Z VC, not to like take Megan's title for it, but like really just the Gen Z VC community. But then now just knowing a bunch more founders. And so in this role as head of founder community, there's so many people who are in our Venture Fellow and Associate program that I now like tap into for events for founders. Like Emily at Night, she was one of our first like venture fellows. I think she was in our first cohort. And Jeremy at General Catalyst, like Jack at some point, Jack McClelland at A4, he was actually an intern at Republic as well. So it's interesting to see that like our investment like 3 years ago, creating the Venture Fellow and Associate program, so many of these people are in VC now, right after college or dropping out of college. And so that coming together was like a huge motivation for me. And I think kind of like the natural segue into being head of founder community.
I am also a product of the Venture Fellow program, not when you were running it, but so it's so true. Like before that, I mean, even compared to like my resources at the MBA at UCLA Anderson, like the actual and versus like the YC startup school, just so much more tactical, the resources that you guys put together. So there's a lot more room for more resources like that. So amazing that you've been working on this. So you studied econ and art history at Columbia, and then you also worked at 14 different startups during school, which is crazy, including Alinea Invest, who was my first feature on the podcast. So very cool to see this full circle. And you even founded your own company. How did you decide that you ended up wanting to pursue venture capital? Maybe tell us a little bit more about like all those different startups you worked on, as well as the company that you created.
Yeah, for sure. I think it's interesting because when I came to Columbia, I knew that everyone had told me if you want to go to VC, if you want to go into startups, you have to be an investment banker. So in the beginning, I was very dead set on thinking like the only way I'm going to get to that point is if I get an investment banking job. But while I was doing that and getting very like focused on getting that job, I also realized there were so many startups that just needed help, whether it was like accessing college students, social media, marketing, like growth strategies. And so I just started like cold messaging founders on LinkedIn whenever they raised a Series A, or if they were pre-seed, I would just message them and say, congrats, this is what I've accomplished in the past. Here's what I would love to do for you. And so I worked with like a Series A cat food company. I worked with Alinea and they were like pre-seed at the time. And it was like before they went into Y Combinator. And it was really cool to get all those experiences. I also like to say that 9 out of the 14 companies I worked at still exist, which I feel like is a good metric, especially when it comes to startups. But I think a huge motivation for me in doing all that was understanding like the operator experience. And frankly, like I knew VC was this thing that was interesting to me and I maybe wanted to do it in the future. But until I had had those experiences with like a Series B founder versus like a pre-seed founder and realized that no matter how much money they raised, like fundraising was always this all-consuming, intense process. That really made me realize that there was something there to kind of uncover. And I didn't really understand the way that like VCs worked. Like I didn't know how they found companies or did diligence or the way that they made decisions. And that all 14 of those experiences, I think really informed me in just wanting to understand it, because part of it came from frustration where a lot of these companies were incredible women of color founders and they just would have like a really tough time fundraising versus the founders that I worked with that had maybe like male, white, straight, cis founders, like they would have a really, really easy time fundraising. And so even just being like a young person kind of noticing these things with the founders I was working with, it was kind of like I felt like I wanted to understand why the ecosystem is like that. And the longer I've now been in VC, it makes sense to me. Like this industry is pretty new, like it's not even 100 years old. And there's so much need for just disruption and supporting like emerging managers that are focused on the space. But that experience coupled with having been a founder when I was growing up, that company, it's interesting because that company was more like, I like to say I was an entrepreneur because whenever I think founder, I think like VC backed company. I don't know why. There's like a whole other thing there. But I was an entrepreneur before going into undergrad. And that company I scaled to profitability and it was pretty successful. And I closed it before I moved to New York to go to undergrad. And then in my junior year, a friend and I worked together to found another company. And so I like to say one succeeded and one failed. The one I founded at Columbia didn't really work out, largely because it was an industry that VCs like didn't really understand. And a lot of like investors told us this isn't like a VC backable industry. So that also motivated me to understand like alternative fundraising because oh God, there's so many things we could talk about here, but I feel like VC fundraising as a type of fundraising is put on a pedestal in the sense that like if a company is profitable versus if a company has like a certain VC backing them, that's tier one, even if they're not profitable, that company is perceived as like more successful, which is interesting because I think there's a lot of stuff to unpack there. But the TLDR is we just realized that the company we wanted to build maybe wasn't necessarily the best fit for some of these like VC like business models, which totally makes sense. But I think that is also what further motivated me into wanting to understand like, okay, then how do you define like a consumer tech VC scale business? And how do you even predict that at like the pre-seed stage? So it's really all of those experiences just made me realize that VC is fascinating. It's so complicated. I think personal judgment comes into every decision and there's no VC that is 100% like methodical or like there are always going to be emotions involved, but all of that really just informed me that there was something more to explore there and something to disrupt for the most part.
My first startup job, I went and worked for a Series A backed fintech. They had raised a round led by Andreessen Horowitz, and just being young and naive, I was like, oh, it's backed by this incredible venture fund. It must be like a startup that's, going huge places. I actually think they're shutting down right now. So that did not work out for them. But to that point, and to your earlier point of like picking a bunch of startups, 9 of the 14 have or are still around. And now that you've just like seen a ton of startups, how would you think about, choosing the right startup to work at, maybe without or maybe ignoring, who the investors are?
Yeah, that's such a good question because I think like people really forget about it when they're looking at startups. Like I have friends now that are looking to break into startups, and the immediate first thing they look for is who invested in them or who led the round. And I think to a degree, yes, it's a signal in the same way that you could argue like going to Stanford Business School or like UCLA or all of those different things have signals and they mean different things. But at the same time, that can be like a good reason to maybe further explore something. But I think the way that you should get conviction in deciding what startups to work at should really, if we're going to make it very simple, be 2 things. One, like dive deep into the product. If it's a CPG product, like, do you like the product? Do you think it's differentiated? Do you think it's competitive? Like, get your friends to tell you what they think. If it's an app, do the same thing. But then I really think the people, it's so cliche, but like the people and the founder and who works at the company is so important because they, regardless of anything else, the people make or break the company. And I really believe that focusing on having conviction in the founder and like listening to maybe podcasts that they did or their story or why they started the company is so much more important than who backed them, because it's the founder and the operators, especially the ones who had been there early, that are going to like take the company forward and scale it. So you really have to have conviction and belief in them more so than anything else, in my opinion. And that was a really huge reason. I had like 4 investment banking offers and then Republic. And that was a really huge reason I chose Republic, because the people that I worked with, first of all, they made like, I was a senior at Columbia and they made me feel like I was full-time part of the team. 1 month into my internship, the CEO like offered to get lunch with me, like all of these things. And the person who hired me, Cheryl, she was like a mentor to me and she was incredible as just like a role model to look up to. And so the people there were just so intelligent, people that I admired and really wanted to learn more from. And that was like a huge motivation for me. And I really implore people to not think about the fund that invested in them, but like think about the founder. If you can like get on a call with them or even just like meet more people at the company and just do a vibe check, I would 100% focus on that.
Okay, so Republic has grown a lot since you've been there. As you mentioned, it was about a 40-person team when you joined. They've now raised over 500 million on the platform with over 500 companies that have raised. What have been your biggest learning lessons, takeaways from working at a high growth scaling startup?
Yeah, I think this probably sounds like reverse advice, but I think focusing on figuring out like you're going to wear multiple hats and that's great. But I think whatever your job is and whatever additional hats you have, figure out like what of those additional things you're actually really good at and come naturally to you. Because like community is not necessarily something I came into this thinking I would be like good at, or even like partnerships. And it just happened to be that I was really good at those things. And even though that was never like for the first 2.5 years, that was never my like core like title or role or what I was doing, because that came so easily to me. It was easy to wear those hats and continue to help the business and support it. And then eventually it became something where I could take it forward and run a project and manage things and really provide value to the company. So I always recommend when you're wearing multiple hats, do a lot in the beginning. It's going to be hard. Like startups require a lot of work, but then figure out which hats you're just really good at and it comes easily to you. Because I have some friends where like spreadsheets and like the way that they're able to like track and manage projects comes really easy to them. Like that doesn't come easy to me. And so then they just become like the go-to person when it comes to like operations or thinking about like projections and growth. And so that is also something that might just be a skill that comes easy to you. So I would like experiment a lot, like take on more than maybe even what your like title is, and just like experiment and see what works best and what comes naturally to you, because sometimes it might be something that's different than what you were hired for. And then you can make a case to do something that helps the business and is a lot more seamless with your skill set.
So true. Trying new things is so important. I'm an accounting background. Had no idea that I would be naturally good at content and community building, but here we are. So that's great advice. To that topic, we all know that personal branding is super important, especially in venture and startups. So how have you personally gone about building out your own brands? and what opportunities have come out of that?
Yeah, so I think for me, it's interesting because I also had no idea what my personal brand was. I think I'm one of those people, clearly having worked at like so many different kinds of companies, I just like was trying everything. I liked everything. Everything was really interesting to me. And I feel like the first piece of advice you get with a personal brand is like specialize, focus on something, build that way. And I don't even think that's what I did. I think that because I saw so many different things and I loved meeting new people, different founders, all different industries, I became just kind of like, I just realized that that was a unique thing because a lot of these other VCs are sector and industry specific. And so having like done venture partnerships for a long time for Republic during my internship, and then now like having met founders, I realized that as like the person who's a generalist or who loves everything and like researched all these industries, I could just like be helpful to other VCs in that like I could just send them all the deals I got and like my high level thoughts based on what was applicable to their stage. So that is kind of what like started my personal brand, where I kind of just made myself known, especially amongst like other younger investors, as like the person who like always has the deal flow or like always has deal flow and could send it over to them. And so I feel like I built my personal brand from being an aggregator, and that's like not what people expect. Like it's just like, okay, you're an aggregator, like, so what? But honestly, using that and creating the Z list, which started as like deal flow aggregation, was a really huge part of the reason that I could even get to the point of having a personal brand where I could actually talk about things, or even just like say, I've seen like 60 decks this week, completely different industries. When Web3 was really popular, I saw like so many different decks, like completely different industries, and almost like 80% of them had a Web3 play. So I remember tweeting something about that, and that was one of my first tweets to blow up, because I think people who were focused on Web3 were of course seeing everything and like knew about it. But then I was seeing like CPG companies trying to throw in like a Web3 component because they were having a tough time fundraising. And so that just became like, I guess, something that became a personal brand. I feel like it's easy to kind of first focus on like, what should I be known for? What should I be known for? I would honestly focus on, if you don't know what you want to be like specialized in, I would just focus on being like helpful, whether that's referring deal flow, whether it's like helping with customer interviews, whether it's like asking other VCs like what types of events they want to see. Like that's a really, really good starting place. And I think that's like a huge part of the reason that like I've gotten to the point that I have with like having 8,000 people like sign up to get like to come to events that I'm hosting like in New York. It's, I think a really huge part of it is just being that person who was helpful and an aggregator. And now like I do have an opinion and I do have like an industry that I like investing in, and I have all of that focus, but I did start with the more like broad things just to figure out how I could be helpful to people.
So are you hosting your own events outside of what you're doing with Republic? And then also just explain what the Z list is.
Yeah, so the Z list, for lack of better words, is very much about me. The Z stands for Zehra, and basically, like, it is a curated community for deal flow for founders and investors. Just to kind of further contextualize that, yes, I am hosting events just like as the Z list. We hosted our first one with Barclays around 2 weeks ago now. And the whole point of it is doing these like in-person events to, first of all, like allow founders and investors to meet, but also just do educational content for investors and founders separately. And then when it comes to the actual core of the Z list, it is all about deal flow. So what started as like me just aggregating every single deck I saw in like a month or 2 week period now is a bi-monthly newsletter that goes out to a curated group of investors who are actively investing. And it's basically the top 10 deals that I feel I've seen in the last 2 weeks, with like a whole diligence memo about why I like them, why the Z-List team likes them. And again, thinking about like myself when I was an undergrad, I would have loved to have gotten like that type of exposure in front of a lot of like VCs. So a lot of those memos are getting written by undergrads who are interested in VC and like wanting to like kind of practice their like deal writing diligence skills. So all of them are going to be like credited in it, and you'll be able to connect with them for their thoughts on like what diligence they did. So that is really like the core around it. And so founders are able to apply, and then we diligence the deal, get it in front of the investors. And right now we have almost every major fund represented through at least like an analyst, associate, principal, or GP as part of the Z list. And then we're really strict. So if someone just like hasn't like clicked or opened the emails after like 4 times, we remove them just because we want to keep like the founders making sure that they're getting relevant introductions and not bogging them down with stuff when people aren't really actively involved.
I love that. Can you share a recent company that's been on the Z list and or maybe one that's like actually reached a deal through the Z list?
Yeah, so my favorite one that happened recently is Mentra. So Sam Altman led their pre-seed, and I think he did the whole pre-seed. It was like 1.3 million. And then they ended up getting into like a really great competition with Microsoft and got like a lot. I think it was like a micro like check from Microsoft as well. And so when they reached out to me, they were in the process of doing their seed round. They had secured a lead VC, but they just wanted to get like more strategic angel investors involved. And so the Z list like isn't just for VCs. We also work with angel investor groups. So I think they raised a couple $100,000 through a Z list introduction with this angel investor group that ended up syndicating and investing through them. And so it was really exciting because Mentra is a platform, B2B platform that allows people who have neurodivergence, like different tendencies to get jobs and for those to be seen as assets, not like, I guess, like not like disparaging or people kind of like, I think being discriminatory when it comes to hiring. So Mentra is really, really cool because they are working with like these huge companies now post this seed that they just closed a few weeks ago to help people with like neurodivergency to actually get these jobs and for people to recognize that it's like a superpower. So that's like one of my favorite deals that we've done recently because they just like were awesome and they did get a lot of requests. So it was good to see that like the Z list was getting some like inbound as well for people to join it as well.
For women who might want to start something like the Z list, do you have any advice?
I think, again, this is going to sound like really annoying, but it's what worked with me. When I was trying to find companies to, first of all, intern at, I literally searched up like founder and then put the location New York. And I just went through like every founder until I could like not tolerate it anymore and just like looked at all of these companies. And I really feel like that's a good strategy because you can reach out to all these founders and ask them like what they need help with. And sometimes like I did work for free sometimes, and I was fortunate to be able to do that. But I would ask them like, I'm happy to do like a 3-month project if you need help with like one specific thing. And so the Z list honestly like started when I was at Columbia. I called it like Zehra's list, where it was more just like me aggregating like resources and tools for like jobs and hiring and stuff when you're an undergrad. But I think even just like starting something like that where you can compile your own observations. If you go to a bunch of like VC recruiting events, like start a blog, start talking about it. And then the only reason that I'm even fortunate enough to like now have an opinion and like work with a venture company and like actually understand the way that I have and can formulate my own opinions is because I did all of that like 4 to 5 years ago. So I always recommend like starting with, I guess, like for lack of better words, again, being an aggregator, collecting all that info, whatever you're interested in, and then really putting it out there and being like the synthesizer for everything.
And have you made any angel investments yourself through the Z list or through, I know there were some other communities you mentioned as well.
Yeah. So my angel investments thus far have all come through either just like I reached out to the founder and like interned for them, or it came in just like cold to me. So it's interesting because I started building like, let's say, a presence with the Z list. I think more like VCs and founders knew who I was and they knew like what I was building with the Z list. But I think as a byproduct of that, me starting to actively talk about the fact that I was angel investing, just like let more founders reach out to me. So a lot of these founders have reached out to me just like through email or DM'd me or messaged me on LinkedIn. One of the companies that I worked at, I think like starting in 2020, and it was like one of the startups that I worked at in undergrad. I like worked there for 2 years and ended up like leaving, of course, like when I started full time at Republic, and they had like a venture round, but then they didn't have any availability. And then as soon as their last round opened up, I invested because I was like, I have huge conviction in the founder. She's amazing. It is one of my favorite companies. And so that actually ended up being like my first angel investment. And I think again, like a huge part of that was credited to the fact that I worked with her and I had huge conviction in the founder, but then also just like the product is amazing. The company is called Kulfi Beauty. It is one of my favorite makeup companies, like actually, I use like all their products pretty consistently. So I love them. And that was like my first one. But then everything after that has been just like through cold inbound. So again, like if you build that brand presence of like being an aggregator, being someone that is like making it easier for people to find deals, or you're helping founders, I think inadvertently you're going to just start creating like an ecosystem where people know that you're interested in getting connected to these people.
So obviously you work very closely in the world of startups for women that might not work in like the startup VC space. How would you recommend they become like comfortable with angel investments? And are there any like resources, communities, or perhaps even, other platforms you recommend where they can learn a little bit more about this?
Yeah. So I think the first that I will highly recommend is Hustle Fund, which I think like whenever you say angel investment on Twitter, like people are going to recommend it immediately. Hustle Fund has their Angel Squad, which is an incredible resource. They actually break down how the VCs at Hustle Fund think about deals, but then also like present it from the perspective of like, as an angel investor, you're like scope for returns and stuff is going to look very different than the economics of like a VC investing in a deal. And so even just like talking about those differentiators, I think is really important, because I know some earlier stage angel investors, they obviously want like venture scale returns. But again, there's this whole notion of like, what is a venture scalable business versus just like a good business to invest in where you're going to get a return. So I think sometimes differentiating between that is really important, because people sometimes are surprised that I invest in like CPG companies, but for certain CPG companies, I have a lot of conviction and I don't need like a venture scale return. I like any return is good, especially when it is like women of color founders that I like to support. So I think Hustle Fund and Angel Squad, great resource. Another angel investor group that is actually the one that I mentioned, did this deal with Mentra, is the Council. So the Council is a group of female operators that are all like incredibly well versed in the space. The founder of the Council realized that like a lot of these other men were getting together and like exchanging deals and had more understanding of like how to angel invest. And she realized like there was no equivalent of that for her. And so she went out and started it. And I love them because they're all operators turned angel investors, most of them at least. And so they have like ample experience working at startups. They know the ins and outs. They can appreciate the complexity of like dealing with certain problems as a founder. So I love them. They are starting to do a lot of like Angel Investing 101 programming, which is awesome. And then I would be remiss to not mention that the Z List is doing an Angel Investing 101 program as well. And the Council is involved with it. And our first event is going to be in person in New York in a few weeks, actually. And Carta is sponsoring it. So I'm very excited about this space. And it's great that you asked this question, because no one is doing this right now, at least for in-person stuff. So I'm hoping to make like that another part of the Z List too.
Incredible. We'll make sure to share that link with me, and I will get it blasted on all the channels. So important to like get access to these kind of educational events. So back to the returns, like, are there certain numbers that you target personally in your investments, and like what should people be thinking about in terms of targeted returns for angel investing?
Yeah. So for me right now, and I feel like I'm going to be like completely transparent. I think when I was starting out, I was honestly just thinking if I could get this money back, then that would be great. Like it didn't have to be that complicated to me, especially because I'm so young right now. And I'm really fortunate because just because of like the brand that I've developed and my skill set, a lot of founders would accept like my smaller check sizes, as opposed to some of the older, more experienced investors that they like ask to have like larger check sizes. So for me, like that was kind of my bare minimum in the beginning. Naturally, I've become a lot more discerning since then, because it is like now I'm actively angel investing and I don't want to just be like kind of giving out money and not thinking about it strategically. That being said, and I think this like comes off from this entire conversation, I love to think about like the person first and whether or not I believe they have, first of all, that they would return my money at minimum, just like whatever I invested. Second of all, if they have the ability to scale the company to exit or to IPO, depending on the business model. And so for like a CPG company, I always think about like acquisition strategies. And so that's something I'm really interested in, because we've seen these like incredible acquisitions recently, like Aesop and L'Oreal. And I think Hero Cosmetics, and I think it was like that baking soda company that acquired them, which was like kind of random. But there are just like a lot of really interesting CPG acquisitions. And so frankly, like I'm not the most well versed in the economics of it, but I've started to kind of investigate it further just to understand the differences between a venture scale return, which is like IPOs and it's like so much more dramatic, versus like a CPG like exit, which obviously through an acquisition is not going to be at the same level. So that being said, I don't think I have any hard and fast rules. Like I again love investing in CPG if I have conviction in the founder. And so for me, it's like, first of all, I think like, do I think I'm going to get my money back? Honestly, but I never even like, I've gone to the point now where whenever I invest, I'm just like, okay, goodbye. The money is gone. Like, even though I know it's not in my head, I'm like, okay, the money is gone. And I don't even think about it until it happens. But I feel like for me, the whole thing is always like, do I have conviction in the founder as a leader, as a person who can take this company from 0 to like 200, which I think like any VC, even the later stage ones that require like so much quantitative analysis, they have to ask themselves that question too, because the CEO has to be the person who does succeed at like the really small scale, but then also when it gets like massive.
And do you have like a rule about your portfolio of like, I would allocate this percentage to angel investment, or still figuring that out?
Honestly, still figuring it out. Like I think I like to think that I am very like in the middle of like risk averse and risk taking, which just I don't even know what that is. It's just like in between it. And I think the way that I justify like me angel investing is that like a lot of the money that I made for myself, I like saved, and I immediately like started investing in the public markets. So I feel like I can rationalize it in that regard. And then also this is like more me joking, but I don't really like treat myself that much anymore, where before maybe I would have like what would have been an angel investment in like a syndicate maybe would have been a bag or something like that. Where so now I've told myself like, yeah, instead of a bag, like I could maybe make an angel investment and like kind of write things off and be balanced. That's like I'm kind of joking, but like also I'm not, because sometimes in my head I do just like weigh things like that. But honestly, I'm like figuring it out still. I wish there were more resources that could help like young women figure this out, because like at this point, other than talking to like mentors and people I meet one-on-one, there's like no publicly accessible like documents. Like I had to make my own template to like track my portfolio and like understand everything that I had from like my ownership like in Republic versus having like advisory shares in another startup versus investing in one through like a SPV versus like investing directly in a safe note in like a stealth company. So I'm still trying to figure all of that out. At this point, again, just given everything the Z-List is doing, I may just end up making templates there. But it is really hard because I don't think there are a lot of solutions right now to understand like how to manage your portfolio as an angel investor. And I'm really looking for some.
Yeah, I completely agree. If you find those resources, please let me know, because they're very needed. In the interest of time, we'll start to wrap things up. Can you share a female founder, investor, or leader who inspires you, and a little bit about why?
Yeah, so I know I mentioned the company already, but I do sincerely love Priyanka, who is the founder of Kulfi Beauty. She has a killer just like background that makes her the best person to found that company. She worked at like BCG, went to Harvard Business School. She was like one of the first employees at Ipsy, and like was the reason that they scaled to like the insane, like just at the insane pace that they did. So her experience in beauty is incredible. I have full conviction in her as a founder, and the products that she makes are just top notch. Like I think the biggest thing for me is also that she, as a South Asian female founder, is creating products for other women of color that just haven't existed in the beauty market, like even concealers of the right undertones. My sister and so many of my friends have to buy like 4 concealers in order to mix them to get their shade. And now Kulfi is out here like creating new products for now one of the most populous, actually no, the most populous country in the world, India, and just like this, like everyone from South Asia as well. So I love her. She is a huge role model. I think she's amazing, and I just like am always giving props to her because she's just like the coolest person.
Incredible. And then finally, where can people find you? Where can people find the Z-List and Republic?
Yeah, so you can find me on Twitter It's my name, Zehra Naqvi with an underscore. Republic, same thing on Twitter. Join Republic is our handle. And then the Z list you can find through my Twitter. We are in the process of making an incredible website, so that should be ready in the next 2 months. But for now, everything is on Twitter for me.
Awesome. Well, thank you so much for joining the show, and it was so fun to learn more about your story.
Yeah, thank you so much for having me.
Thank you so much for listening to this episode of the PlayBridge podcast. If you enjoyed the show, make sure to rate, review, and subscribe. And for more updates, make sure to follow us on social at Bridge Club. That's at BRYDGECLUB at Bridge Club on Instagram, TikTok, and YouTube.